Thought I'd record this video because there's some lessons I really need to learn, some takeaways from a stupid trade I made. So, and if I want to be a successful trader, I need to get these down and get my head wrapped around these mistakes that I'm making. So if we go back to the 20th, when we had this nice selling off price action, I actually planned to catch it. Let me just zoom in a little bit. I actually planned to catch it on this candle just as it was about to close, looking weak, because I jumped over to Nvidia with Nvidia being the catalyst that day. Nvidia was up on earnings, and obviously Nvidia makes up something like 8% of the total market cap. That's inside the S&P. So Nvidia had sold off from the open, and it was struggling to sort of regain above that open price, and that to me was confirmation. So I came back to SPY, started to plan out my strike, to get my contract ready to enter, but in the time that it takes, the red prints came on the next candle, and I didn't want to chase. I didn't take advantage of. I didn't get to take advantage of this sort of entry opportunity on the rebound, which I should have done. And then, we just had this selling off action, and this sort of triggered emotions in me, like, I'd sort of entered like a revenge trading mode, and stupidly, I tried to catch a falling knife without waiting for confirmation. And it was on this candle here, the only small green candle that we had in, the first one that we had in this sort of rundown. Trying to be very hopeful that we would at least get some bounce. In my mind, I was thinking, this has to bounce. We've dropped so much. Completely stupid. I entered completely based on emotions. I had no defined level of risk, no defined level of profit target, and it's a complete emotional trade. And when I realised that quite early on, and what I'm not good at, which I need to be good at, is when I realise that I'm in a trade because of an emotional decision, whatever's happening, I need to be able to cut. And I didn't, even though, like, if I plan out a trade, I can cut if it's within my plan. But if I don't have a plan and I know I shouldn't be in the trade, I find it hard to actually realise the loss, because it's a loss that I shouldn't have had. So I need to really work on that. Ideally, I can work on not getting in those trades to begin with. But, if I do take any more emotional trades, I also need to work on being able to cut. And yeah, well, with option contracts, the most you can lose is the cost of the contract. And I paid something like $8 for the contract, but it's 100 shares, so it's $800. The account size is like roughly sort of 2,900. And so I was out, like, the risk was the $800 because I didn't have a planned risk level, and I couldn't cut the trade. Didn't hedge against the trade either. Obviously, to hedge against theta, it being option contracts, and I set my limit price on the option contract for break even, and close the platform to leave the trade to play out, checking on it every now and then. And then left it on the last day of the week. Didn't even look at the price action at all. I was just hoping for the fill. Looks like here I got back to pretty much break even, but obviously with there being some theta burn, I'm guessing it wasn't quite there. So I had an opportunity to take it off if I was looking at the charts. But obviously I wasn't, and I didn't want to look at the charts. I was well, one, I was emotional, and two, I was busy that day. So yeah, if I'd have just kept an eye on it, I could have got out for break even, but then maybe that would have been a bad idea because the lesson wouldn't have been as felt as hard as it has been. So yeah, I left it over the weekend. Theta working against me. We were having the gap up on the futures, and we started getting this nice sort of push at the open. And what I needed, even though we was break even at this point on the actual price level where I entered, I needed to get to somewhere about 670 to be break even because of the Theta burn. You know, it was an out of the money strike. And you know, we're in the expiration week of the contract. I got the 28th expiration, I believe. Yep, 28th expiration, and the Theta burn just hit hard. So this morning I was watching the price action, looking for the push up, and if we looked weak, the plan was to just take it off, just take the hit. And then this candle opened. I was watching it push up, and then you know it was pulling down. I was watching the volume confirmation. If this had closed and we had like a smaller volume bar, probably would have left the trade on, because that's obviously volume confirms the price action. So if you get a candle that doesn't match the volume bar, then the direction that it's moving in isn't validated, and you would look for the opposite move to happen, or at least it's a sign that the opposite move could happen. But there was sufficient volume in my mind for the size bar, especially relative to this one. So as this opened, I cut the trade off, and the hit was $300 on a roughly $2,900 account. So it's quite a big percentage. It's a loss that I shouldn't have had, but if I can take the lessons away from it, that I should take away from it, then it's tuition fee. It's not a loss, it's tuition fee. So yeah, thought I'd record that more for my own benefit. Suppose I should talk about what the takeaways are. The takeaways are: don't catch a falling knife. Walk away when feeling emotional. I don't revenge trade. What else is there? There is make sure you have a proper plan before entering. And for those of you who have read Reminiscences of a Stock Operator, or at least listened to the audiobook, one should be, short in a bear market when you're bearish, and long in a bull market when you're bullish. And as you might be aware from my previous videos with my short plan for the week, my analysis of the bigger picture market conditions, I'm bearish on the market, or at least I was on this day. I suppose I still am a little bit. There's more opportunities for a pullback, and so yeah, I'm trying to long when I'm bearish on the market. So that's another rule broken. And was there anything else? I mean, I've wrote up the post, so I've put it all in the post. Yeah, obviously I need to learn to cut the trade off when I find myself in an emotional trade. I take a trade with a proper plan, wait for price action and volume confirmation before taking an entry. And stick to the rule of not trading when tired. Yeah, maybe there's some more that I'm missing, but I'll have another think and see if there's any more takeaways. Anyway, thanks guys.